गुड मॉर्निंग एवरीवन, वेलकम टू अड्डा 24/7। माय नेम इज निहारिका वालिया और मैं आज आपके साथ में हूँ फॉर द जाइब सीरीज। वी वर डिस्कसिंग अबाउट द AFB, सो लेट्स कंटिन्यू विद दैट। Okay, so let's begin with the series today. आज another set of 10 questions to be discussed for this examination. So let's continue there. हमारा already we have already started with our batch for the JAIIB November December, and currently a batch is going on. A new batch has just started from 25th. One batch had started from 11th. So if you're looking forward to any of your classes regarding this examination, so what you can do is you can enroll on our application. You can purchase it directly from the application, or you can purchase it directly from the website as well. It is always better to go for the application because you get additional discounts through the application. Along with that, at this point of time, if you're looking forward to it and you would like to apply the discounts, then you can use the code Y541 for this. And at the same time, when you're looking forward to this classes regarding AFB, we have started with it, and the PPB, AFB and LRB batch has started from 25th as well. So again, the timing has been decided there. So what you can do is you can check out the timing for each and every subject if you're looking for all the subjects all together or any specific subject. Rest, when we talk about, this is not the code that we're using, the code is 541. And regarding accounting and bank, regarding the accounting area, when you're covering it, it is very essential that the regular practice is there, because the point is that accountancy is something where you cannot skip the regular practice. It really affects your entire consistency in terms of learning, because accountancy requires technical knowledge, and at the same time, when you are working on that technical knowledge, all you need to do is that prepare your own notes, have your own mind maps too, even when you are going through the classes and everything else as well, because those quick notes are going to help you to cover it up in those last 5 hours, because it becomes a little difficult at the last moment to revise everything from the point of view of the classes or in terms of any EPDFs or everything. So what's always better to have your own set of notes so that you can cover it up in the minimum time. Okay, so let's move on and start with today's class. The first question is again regarding the accounting concepts. Today there are a few questions regarding accounting concepts, a few regarding the nature of various accounts. So let's quickly understand those areas. Number one is the revenue recognition accepted for the gold is recorded in the books as soon as its production is complete, and because of the principle of conservatism, realization, objectivity, or none of the above. When we talk about the revenue recognition concept, see, revenue recognition accepted for gold. Gold is something which has its own market already. It's regulated, right? So as soon as the gold is taken out, the rate is already determined, how it will be sold and what is the way through which it would be sold. So it's already decided how to look forward to that. So in this case, you cannot rely on the area of conservatism that once it's sold only then we'll record it. And even objectivity or verifiability cannot be used here. So it's more of the fact that once you have actually done that particular work, you have extracted gold, so it's ready to be sold. So it's basically realization concept which uses it. So it's basically because of it has an organized market, and in that organized market the price is determined from time to time. For example, currently when we talk about it, it's around maybe 49,000. So that is something which for 9,000 something is going on. It started with at a very small price. I think when the last I remember, the least price that I'd seen was 25K, and currently it is at 49 something. So that's how the particular determination of price is definitely changed. So one of the things that definitely affects the price And being a regulated market, there is no uncertainty in terms of its working there, right? So let's quickly move on towards the next question. Okay, the second question is again about the area of the conceptual knowledge. The second question is about the revenue recognition concept again, but from the point of view of why it can be postponed. See, the point is revenue recognition plays an important role in terms of the recording of the transactions, because we need to know whether the money that we are using exactly has a relevance for us or not. Right, that means the timing for recording the transaction is essential. If we need to know when that particular thing that we are recording helps you or not. So at what point of time can we postpone it? The reason why revenue recognition is postponed is there is an uncertainty relating to the collectability at the sale of the goods. Consideration to be received is not determinable due to specific reasons. There is a certainty related to collectability at the time of sale of goods. If there is a certainty, there is no reason to basically postpone that. That means there is normally a certainty there, so we record it at that particular time only. So this is not correct. And at the same time, when we talk about the second one, that is about the consideration to be received is not determinable. That is something which will not affect as well, because till the time it is not determinable, it cannot be treated as something where there's a sale, right? So when we'll record the revenue, when there is uncertainty, once it's certain that the amount will be received by us in any case. So in that case, revenue recognition is all about A. That means there's an uncertainty relating to the collectability of the sale of the at the time of sale of goods. When we have this scenario, only and only then we'll postpone it till the time we don't get that particular amount back. So this is basically recognition criteria. When exactly do we record the sale of goods? When once we have transferred those goods to someone else for a certain period of time, there's no effective control to be retained regarding the goods, and no significant uncertainty exists. When the uncertainty exists at that point of time, we'll not be able to sell those goods. Now, comes the question number third, which is about Accounting Standards Board. Accounting Standard Board has played a very important role in terms of the accounting standards. In India, the accounting standards have been prepared by them, and along with them, those are issued under the umbrella of ICAI, Institute of Chartered Accountant of India. Even the Ministry of Corporate Affairs has been following that in terms of the Companies Act. It is officially stated on their websites even that what are the accounting standards that they need to be followed, they need to follow. Along with that, now earlier we were just having accounting standards. Now we have upgraded and we have now Ind AS working in our country. That means all these things have been coming up because of this particular organization. So Accounting Standard Board was set up by which particular organization? Was it set up by ICSI? That means the CS has done that, or the CWA, Cost and Works Accountants, have done that, the Chartered Accountants have done that, or the Government of India had set up this particular board. So when we talk about the accounting standard boards being set up by the accounting standard board was exactly set up by the CAs again. That means it was done by Institute of Chartered Accountant of India. SNA, this is not the only organization which has been involved in the working. Even there had been other organizations and committees which were set up by ICAI, who had been working towards the development of these, or the you can say the creation of these accounting standards. So they had done their part, but the main point is the accounting standard board played a very important role, right? I'm sorry. So this is where I can say this is where they have specified the ICAI recommends the accounting standards to be notified by the Ministry of Corporate Affairs Wide Company Rules 2006. Presently, when we talk about the AS, Ind AS is currently is in use in our country. Earlier, there were accounting standards which were, there were around 32, and among them a few were deleted. And I think AS6, there is one more. There are multiple AS which were basically introduced and they were removed, and they were added in other accounting standards. So there, earlier it was 32, now the Ind AS have started, Ind AS have different serial numbers, there are certain number of 100, and that is how they've specified it. So right now accounting standards board is playing its role in terms of AS as well. They had been working on that. In terms of Ind AS also they have been working the applicability, objectivity, the objectivity of that particular thing, how to look forward to the accounting standards, if there's a change required. This board plays a very important role there, right? So let's move on to the next question. The question says a developing but not yet enforceable claim. There's a claim, it has been developing but not yet enforceable claim against the other person, which accumulates with the passage of time or rendering of service or otherwise, is an actual expense, an actual asset, actual liability, or none of the above. Now, the point is, in this case, what's happening is we have an enforceable claim. That means from someone else, we're going to recover the money, but we are not able to recover it at this point of time. Maybe later on, we'll be recovering it. So when we'll be recovering the money from the other person, it's not a liability. It's not even an expense. It's basically an asset, because there we have the right to recover the money from a particular person in the upcoming future, because it's an enforceable claim. For example, I might be rendering a specific service, and with that particular service I'll be receiving that particular money. Good morning, sir. So this is about the accrual asset. Okay, now this is about the inventories. In case of inventory valuation, cost or NRV, whichever is less. In terms of the inventory valuation, what happens is the businessman follows a particular thing. What do they follow? They follow a rule that if the cost of the goods is 1 lakh and the net realizable value of that particular good in market is 80,000. Now look at the difference between the two. 1 lakh is the value at which we purchased it, and being following the historical cost concept, we noted it down at 1 lakh. But the point is, currently it is at 80,000. Maybe there's a fall in the market price of those goods, and now it cannot be sold at that price now. So in that case, what will happen in this scenario? In this case, what will happen is we should note down the value of the stock at 80,000, because right now it doesn't cost the same amount. The value is not the same as it was earlier. So that means there's a fall, and this fall has to be noted down in our books of accounts. So this particular amount, cost or NRV, whichever is less, since 80,000 is the lesser amount, this will be noted as the value of the closing stock or inventory in the books of accounts of the organization. So which particular concept is responsible for this? The concept responsible for this is prudence. Prudence or conservatism is the reason that we do not, though we, even if the value of the stock increases, maybe it was 1 lakh currently, and in the later period we find out that this particular product becomes very unique product and people are ready to purchase it for maybe 1,50,000, and the costing might be increasing in the upcoming time period. And that is something related to the inflation part, right? So if the value increases at what we are purchasing it, it is inflation. But currently what we have in the books of accounts, or what we have in a store, if the value decreases significantly, or you can say it goes lesser than the price at which we purchased, because of the fact that it might be losing its demand in the market, some new products might be coming up, so the value of that good basically goes down. So since the closing stock value has already gone down, the loss shall be recorded ASAP. It should be recorded as early as possible, because why to delay recording of any loss? Because if we know there's a loss and we've not recorded in time, what will happen? We're just putting unnecessary burden on the company, because someday they will have to face a loss. Then why not today? Right? So this is about this, and now let's move forward towards the next question. This is related to the terminologies of the accounting there. Claims against the company not acknowledged as debt will be classified as contingent liability, commitment, long-term borrowing, and short-term borrowing. Claims against the company not acknowledged as debt. If there is any claim against the company which cannot be acknowledged as a debt, it will be classified as it's basically sometimes some people would have sued the company, and there might be almost no chance that they might win that particular case. So but since there's an uncertainty and we need to disclose it, so out of that particular fact we'll be noting it down. So in this case, what we'll do is we'll record that particular part. So since it's basically something where we might have to pay to the other person in future, it cannot be a long term or short term borrowing because it is not certain yet. So it is gonna be an uncertain thing. So it's gonna be a contingent liability, right? So it's basically a contingent liability, which can be the claims which are not acknowledged as debt yet. There can be guarantees which have been given today but haven't been claimed yet. So it's also about the other money which can be receivable by the people there, right? Okay, so let's move on to the question number 7. Nature of the unearned brokerage is unearned brokerage. That means that this particular brokerage is yet to come into our books of accounts. We have definitely given the service, but somehow the amount isn't earned yet. Okay, no, this is unearned now. Unearned means that someone has paid me beforehand. That is unearned. That means it is unexpired or unearned is a situation where someone would have given me the brokerage before I gave the service to that particular person regarding that particular transaction. So the brokerage is received in advance. Is it basically a real account, personal account, a nominal account, or a liability? When we receive that particular amount before that particular thing, that is basically a personal account, because we have received the money from Mr. A for some unearned thing. That means it is something that we have received in advance. It's related to an advance money which is received for something, for the service which we haven't given yet. So it's basically relating to that particular person. The expense or the income is recorded only when that particular time accrues. Right now it hasn't accrued yet. That particular time isn't there. So in this case, when you have any unearned brokerage or any unearned income, that means or any unearned expenses. So then unexpired expenses, basically we use the term unexpired expenses when we pay before time. And then we have unearned brokerage, where we are supposed to we have received some money from some particular person for some services which are not provided yet. It's more or less a headache on our heads, because ultimately we'll have to provide the service as we have received the money right now. So this is basically a personal account. So personal account really records all those areas like unearned brokerage, accrued interest, prepaid rent, outstanding salary. These are all something which basically forms a part here. It can be any prepaid or any outstanding expense. All these are a part of real, personal and nominal account. So when we talk about the personal account, it's all about the persons. So it's, if any amount is due to any person or any amount is to be yet to be received from certain person, it goes into this area, right? Next question, which of the following is not a deferred revenue expenditure? When we talk about the deferred revenue expenditure, it is basically an expenditure which is done at one point of time in bulk, and it is for, it may be a huge amount, and it is something which is done for a few years, few upcoming years. So you'll have to segregate that amount and record it as an expense in those years, and you have to currently capitalize it. That means currently we'll be noting it as an asset and recording it in the balance sheet, and later on we'll be writing it off over the period of time. That is what we do in this scenario. So when we talk about this particular thing, that is the deferred revenue expenditure, what is it not about? That's the point here. Expenses in connection with the issue of equity shares, preliminary expenses, heavy advertising expenses to introduce a new product, or legal expenses incurred in defending a suit for a breach of contract to the supply of goods. Equity share, expenses are capitalized, it is shown there. Then at the same time, when we talk about the preliminary expenses, it is also something that is recorded. Heavy advertising is also recorded as a deferred revenue expenditure, as it is written as advertisement suspense account. So that is also there. One of the things that is not, there is a legal expenses. This is a daily expenses. This means it's a revenue expenditure for the company which will be recorded in the profit and loss account. So this one's wrong there. Right, legal expenses incurred in defending the suit for the breach of contract. Basically, deferred revenue. Deferred simply means postponement. So if you want to postpone anything above into the next upcoming years, because that particular benefit is taken over the period of time, then it should be recorded that way. Legal expenses incurred in defending a suit for the breach of the contract for the supply of goods does not satisfy the prerequisites. Right. Now, the next question, this is basically a trick question if you look forward to it. The nature of the balance sheet is a real account, personal account, nominal account, or none of the above. When we talk about the balance sheet, what does it exactly note? Balance sheet is basically a statement which records both real accounts and the personal accounts, right? So it records both of these. So technically, the balance sheet has assets and it has liabilities in it. But the point is, does it, the nature of the balance sheet is oriented towards the real accounts or the personal accounts, or it should be both? The point is, when we talk about the balance sheet, it's not an account at all. It doesn't have any specific nature. It's basically a pure statement. So in this case, the correct answer is not real account, not personal account, not nominal account. It's none of the above, because it's a statement, it's not an account. So the nature cannot be determined on this particular basis. So this is it for the 9th question. Now let's quickly move on to the last question. Question number 10 says, nature of the provision for bad and doubtful debt account is nominal account, valuation account, real account, or none of the above. Provision for bad and doubtful debts is basically created by the company for the sake of it that we are uncertain about the money that we are using currently. If any organization might be uncertain about the fact that, oh, we have a provision because there are certain debtors which are uncertain. So because of their uncertainty that they may or they may not pay in the upcoming future, which can be troublesome for us. So what do we do in that case? It's a nominal account, it's a valuation account, a real account, or none of the above. It's basically something which is a valuation account. When we talk about real, personal, nominal accounts, when we talk about real, personal, and nominal accounts, none of these accounts were created when the provision was there. It was created by by a particular Italian person named as Luca Bartolomeo Spiccioli. He had given the golden rule of accounting, but at that point of time, the provisions weren't really introduced. So in that case, when we talk about the real, personal, and nominal account, these can the provision does not fit in any of these. So it basically fits in a particular scenario which was introduced later, and that is valuation account, right? So the correct answer in this situation is the valuation account. So in addition to the traditional classification, in addition to the traditional classification, it was introduced personal and impersonal accounts. Valuation accounts were basically provision for depreciation, provision for doubtful debts, stock account, stock reserve account. So these are all the provisions which were based upon the concept of prudence. So it's basically something where the organization is extremely scared about the fact that we might lose money in the upcoming future. So they prepare this particular account, or you can say this is not exactly an account even. This is basically a provision when you keep a particular set of money aside for this particular scenario. So where you going to use a particular provision for meeting the upcoming losses. So valuation account can be used. We cannot use real, personal, or nominal account there because the provision doesn't fit in any of those definitions, right? So this is where I end my session for the day. I'll be meeting you in the next session, that is tomorrow at 7:30 a.m.